This is Eric Muade for the weekend of November 8th and November 9th, 2014. Let's take a look at how markets closed on Friday. In the US, you see that the Dow closed up 0.11%, NASDAQ was down 0.13%, S&P 500 was unchanged, gold was up 2.3%, and we see that the VIX was down 4%. Gold was oil was up 1% is what I'm trying to say. So it looks like a mixed bag for the major averages, and commodities were up generally and the VIX was down. So let's go to the weekly performance. For the week, S&P 500 was up 0.69%. We see that for the week the Dow was up 1%, and for the week we see that the NASDAQ was almost unchanged. The one thing I can talk about here before we go to the charts directly is on the NASDAQ, it seems to be an area of resistance on the weekly. If you take the previous break and draw a straight line, this is where one would expect resistance or a breakout. So we are going to see that beginning of the new week. If we go to the Dow on the weekly, seems to be this topside resistance on the RSI. So if it turns around and heads lower from this current level, that is going to confirm resistance like it did previously during this high before this most recent pullback here. So this is an area where we need to watch to see whether we find that weekly resistance on the RSIs. S&P 500 weekly, you also see that if you take the tops and draw a straight line, this is where one would expect resistance as far as the S&P 500 is concerned. So let's go to the annotated charts. We take a look at the NASDAQ weekly, and we see that we are still holding above 4582.90, which was the previous weekly closing highs. As long as the market is holding above that price range, then that's a breakout. Anything that brings the market back below that price is going to confirm a failed breakout. And the level we need to watch, of course, as prescribed earlier, is this line here, which is the previous breakpoint on the weekly RSI is being tested. Looks like this is where the market could struggle. But the key here is anything above the previous weekly closing high is bullish. Anything back below 4582.90 is where you start seeing some bearish signs. We go to the daily for the NASDAQ, and you can see over the last couple of days it's been holding above the previous daily closing highs. So that breakout continues being in play there. And the problem here is that we've been expecting resistance on the RSI based on this previous break. So the previous break in the RSI came here. We draw a straight line, and this previous break was what broke this market sometime in August, early September, and we had this pullback. So if we draw a straight line from here, we see that as of right now the market seems to be respecting that, and if that's the case, we might be looking at this down the road as higher highs in price while the RSI made lower lows. So that would be negative divergence, good enough to bring the market lower. On a daily chart, the level to watch is 4598.19, which is the previous daily closing highs. On the RSI, just keep an eye on this line. If it can't hold above that, expect the market to pull back. We go to the NASDAQ hourly, and the hourly continues trading well above the previous range. So that's where it's been coming back the last couple of days and holding that line. So anything above that line is bullish. Anything back below that line can be looked at as being bearish. We go to the Dow weekly, and the Dow weekly is now on week number 2 of a breakout above 17279.78. So the previous weekly closing high has been broken to the upside with 2 weeks. So that's a follow-through week. This past week, that's a good looking breakout. Anything above that price range is good. Of course, if we break back below that, that's a signal to look for a sell-off. The highs on the RSI is where we would expect resistance, also based on the previous line that we've been watching on our charts here. Since 2014, the entire year, the market has not moved above that range. So if this turns into resistance again, that's going to be short-term sell signal, maybe long-term sell signal. If the market can move above that range and trade here in this general area where it hasn't done so in 2014, then expect another strong bullish run into the close of the year. The Dow daily. Now the Dow daily is above the previous highs there. So as of right now, this is looking very bullish on the daily, unless the market can plunge back below that line. But as long as it's holding above this line, the previous highs on the daily, that's a strong market, and we have to respect that. Now the qualification here is unless the market drops back below that range, and this happens to be uniform activity. Right now we are looking at this as a breakout, and even the daily is holding above 69.1. So everything looks good here on the daily. The one thing that I did note in the last weekend analysis video is the length of this move from the lows to the highs is the biggest move in the market in a while. You can see going back more than 1 year. So this seems very extended short term because of the length of the move. More than likely there's a pullback coming soon. We go to the Dow Transports weekly, and we are now trading above the channel range. So there's a price channel here on a weekly chart, and this weekly chart is going back to 2010, and so we've kind of moved above that range. And generally when you move above the range of a channel, well-established channel, the following week you tend to be pushed back below into the channel. So my thinking here is more than likely the coming week could be down based on the fact that this channel has been violated, and usually I'll see the market come back and push it strongly back below the channel so that the average price stays within that channel. So that's what I'm looking for, a pullback on that Dow Transports. On the weekly RSI, this is where resistance can be seen based on the highs of the weekly RSI. So it would make a lot of sense if this becomes resistance and we see the market RSI going down and the price also going down. We go to the Transports daily, and on the daily the price breakout continues being very strong. Nice breakout there in price, but the RSI is showing possible resistance, because if you take the highs on the RSI into a straight line, you see that they come in contact exactly where it closed on Friday. So this is where I would personally expect resistance, also based on the fact that the previous break on the RSI, so this break point right there or right there, was that break, and before we got this sizable drop. So if we draw a straight line, you see that it comes in contact there with where around where it closed on Friday. So it would make sense if we get a pullback based on that chart analysis. We go to the S&P 500 weekly, and S&P 500 weekly needs to hold above 2010.40, which is the previous weekly closing highs. If it can hold above that, then the bulls are in control. But we see again that the RSI tops are showing negative divergence and resistance based on the highs. And in fact, if we take a look at a clean S&P 500 weekly chart, this is what I'm talking about. If you take the highs, draw a straight line on the weekly RSI, you can see it comes in contact there. So I would expect this to be an area of resistance, even based on the back test of this break. So there was a previous break here, which is being back tested by that blue line which connects the previous RSI lows. So those two lines is exactly where the market closed on Friday. My thinking here is it could easily lead to a pullback in the market. In fact, maybe even a serious pullback, or at least a major high being recorded by the market. S&P 500 daily, and yes, we are making higher highs here in price, which is okay. The RSI has moved above the top line, so that's, as of right now, seems like a nice development for the bulls. The problem is the market has come back to the previous breakpoint. Now this line here is what stalled the market recently at this highs, which is here, before we got this pullback. So the market has come back to the previous stall point on the RSI. It would make sense if it stalls here on a day-to-day basis. Otherwise, if it can break out above that line and trade above this range, that's going to be very bullish. S&P 500 60-minute chart or hourly, and we can see here that over the last couple of hours on an hourly chart we've made higher highs and lower lows on the RSI, which is negative divergence. So the hourlies could be indicating that the market is due for a pullback because of that negative divergence. If you take a look at the MACDs, both of them are very close to moving back below zero. If they move back below zero, market could have that pullback everybody's been expecting. Let's take a look at the Canadian market. We begin by taking a look at the weekly, and the weekly right now did close at the previous 10-week moving average range, and this is where you'd expect it to stall. After this big drop, it's come back to the 10-week moving average. Let's see whether it can hold above the 10-week or below, or find resistance. If it finds resistance, we should expect a pullback. Take a look at the daily, and the daily is now contending with here is a strong declining and dropping 50-day moving average. We have resistance probably, or at least it needs to decide whether it can move above the 200-day moving average or whether it's going to stall. So the 200-day moving average can be used as a gauge. Anything pushing it back above the 200-day is good. If it stalls, then maybe we are looking at a different market, where previously on the way up it was finding support on major averages. It could turn out to be that now we are finding resistance on major averages, which could suggest a different type of market. So let's watch and see what happens now that it's back to the 200-day moving average. On the daily, we spoke about the previous break here. That break corresponds with this movement here, which led to a straight plunge there. So we draw a straight line from the break, and you should see it comes to somewhere here, and it's where it closed on Friday. So it would make sense that this becomes resistance, because maybe what we are doing is testing the previous break. We've come all the way back to that line. If we can't hold above that, then that's going to lead to a short-term pullback. If we hold above the line, that's going to be bullish short-term. Let's take a look at the Indian market, and we see here that the Indian market did close at another weekly closing high, and the RSI looks okay because it's trading above 69.1, so that's good. Continues trading well. Recently came back to the moving averages, the 10-week moving averages, and held. If we take a look at the daily, we seem to be making a higher high with a slight lower low on the RSI. That could be a slight problem. Also, the previous short-term break was here, and if we draw a straight line, you see it comes in contact with the same line. So a pullback would make sense, but the market continues staying healthy because it's trading well off its upward trending 50-day moving average. So this is one of the best looking markets because of the way it is trading. It's been bouncing off the 50-day moving average very well over the last year or throughout this year, and so continues being healthy. Again, the one thing that I do note here is potential turnaround situation short term because of the test of the previous breakpoint, which is here, and so a pullback would also make sense. Let's take a look at the monthly chart for the NASDAQ, S&P 500, and the Dow. Again, the level to watch is this previous monthly closing high, so the market is above that range, and for the NASDAQ it is 4580.27. So as long as it's holding above that, RSI continues holding above 69.1. So RSI continues holding above 69.1. That's bullish. So, but that's the range to watch. Anything above 4580.27 is good as far as the NASDAQ is concerned. Let's take a look at the Dow. And the Dow monthly continues acting well as long as it is holding above the previous monthly closing highs. So that monthly closing high breakout. So this is a breakout on the monthly, actually working on month number 2. And so the level to watch on the Dow is 17,098.45. As long as it's holding above that, that's a strong bullish market. RSI continues holding above 69.1, which is what a bull market does when it's on a strong push. S&P 500 on the monthly, still holding above the previous monthly closing high there. So the level to watch on the S&P 500 is 2003.37. As long as it's holding above that, then the bulls are in control. Again, S&P 500 holding above 69.1.